Remember what I said, that you really want to avoid getting into trades that are reactions. You got action, reaction, subsequent action. The subsequent action is your best odds trade in a trend. Of course, crude's just a lot of backfilling, and this may, these exhaustion levels might hold. If this holds, this short trade is going to work really well. So what I like to do on a short trade like that is maybe wait until we see it come down again and then get short one tick below the low of when it just touched the entry there. And I think the odds in that trade may be a little higher, but crude oil is pretty flaky this morning, no doubt. If you back test and find that a specific setup trade, red trade, only gives you 1.1 profit factor, does it make sense to test what the outcome will be if you don't take that type of trade? It's a really good question, and it really just depends on if you're using those trades within a sequence, like if you want to avoid those trades altogether or if you want to just eliminate them. And that's the kind of question you just have to ask. Okay, the trade may not work, but what about how it affects the sequence, like what comes after? So that's one question you may ask. It might help you with that answer. And then also, just make sure you're looking at enough of a sample set, because in certain market conditions, certain setups won't work as well. But when the market conditions change, then that setup ends up being the one that makes the difference on the positive side. So that's another question that you got to kind of step back and ask. And the other thing is, why is it not working? Can you identify the particular setups that aren't working versus the ones that are, and see if you can find some sort of pattern or repetitive clue that lets you know when that setup is worth taking or not worth taking. And I think that's a good thing to really be asking also. Understand the setup, understand its weaknesses and its strengths, and then look for the strengths. And when you say red, I'm assuming you mean the dark pink. Yeah, and that's what's great about the UTA spreadsheet, is when you're putting all that, the labor of love, right, the dark pink. So that's the oversold, overbought. It's the overbought short trade. So my question to you is, well, what about the blue trade? Does that one also have similar issues? The thing about the pink and the blue is that there are certain market conditions when those trades are just money. And then there are other situations when those trades are weak, because they're typically counter-trend trades. And so a counter-trend trade isn't going to work in the face of a trend. If you can identify the trend, then you're going to have a better chance of avoiding certain setups. And one way to look at it is to try to stay away from reaction trades. Go with the action. When the action is waning, so let's say you have a trend that's strong, you have a leg up, you have a reaction, you have another leg up, but ultimately the leg up is weak. So for example, you might say, well, here's a leg up right there. You have a reaction and it didn't quite go into our line, so it's a weak reaction. And then you have another leg up which is weak. Doesn't get anywhere close. The first one, my question is, well, is it still in a reaction? I mean, it finally got to the lines here, the blue line, if you could see it. That's the 20 SMA, which is like your first line of defense, how I look at it. It's a good pullback zone. But the thing is that it's a weak action move up, and, partly because the whole day is just weak price action in general. And we've kind of seen what these reactions look like, long, drawn-out, extended consolidation. So like in this case, because remember, this action, reaction, subsequent action stuff works on higher time frame charts. And so you need to have some sort of an abstract mind to think about it. But you have an action move here, and look at how it mirrors the next action move over here. But you have this long, drawn-out reaction before it starts going, and that's what can get you into trouble. The indicators did a great job, actually, of keeping us out of trouble through that, apart from the first setup. which was trading into a reaction. Trading into reactions is not a good idea. You don't always know it's going to be a reaction, because sometimes a reaction is actually a new action move in the opposite direction when a trend ends. So you look for clues, right? So the clue on this chart might be, where we're at here, is if it could swing back down and test the entry and actually break to a new low below where it touched that entry, that pink trade will have higher odds of working because it already came up and tested the highs. In fact, it broke through the resistance by one tick and no follow through. But maybe it's just waiting because remember, there's no energy today. You have this big long reaction here, and maybe that's what's happening again. Who knows? No one knows. But it failed to get higher, and the odds are that this can go lower. So I think if you were to put an entry now at 58, one tick below, because it's already gone down to 59, that the odds on that trade are probably better than they were when they first set up, when that clearly looks like a potential reaction move to this breakout action move, right? So these are like the higher level things that I look for, just looking at the price action and what it's telling us. We're still not going to know for sure. All we can do is put our best foot forward, try to stack odds in our favor. It's also 6 reversals, but it's just, this is an odd day because there's this very, the time element to trading is always challenging, isn't it? The markets can go really fast or really slow. So in a session like this, it bores you to tears and you fall asleep, you fall off your chair, hit the floor, wake up, right? But a real fast market will blow you off your chair right onto the floor in another way, like a hard slap to the face. So, I mean, time is always a challenge, but I'm going to do this. I'm going to place this trade myself, and I'm going to do it on the matrix. So I'm going to put in a stop limit order to get short at 58. For good or for worse, I'm going to think that I've got enough information that this trade has a good shot. So let's do it. So 76 is my stop, and the entry, I'm going to go to target 3 and target 2 and target 3. Not sure there's enough energy even to go that far, but maybe there is. At some point, the markets start moving. Maybe
Order filled.
So let's go to, see, I did trigger in. We'll go to 43, and we'll go to 37. And money management will be at not 49, but 48, because I made a one-tick adjustment. I didn't pay slippage because I used a stop limit order. So I already gave up one tick on my adjustment. I made up for it by not paying any slippage. So money management is at 63.48. Let me just mark it. 63. So I got to get through the 50-cent level, and that's my magic number to get to risk-free. All right, this is a real money trade. I'm just doing it because I like the setup. I kind of talked you through why I like the setup, and in so doing, I convinced myself. Now, this is the test zone. What will it do here? Want to see closes below 200. So this is the first roadblock we have to trade through to get to our destination. It's also a trade plan trade. I mean, this is the second trade in the trade plan. The first trade was a loser. We've had to wait all this time for another setup. But notice that this reversal is looking a lot different than the one that lost. Because the one that lost was just like, that's the first reversal in an uptrend that could be starting with an action move up after it failed to get lower. So the first clue here is that it broke support and failed. Remember what I said about that. It often sets up a strong move in the opposite direction. So you get a strong leg up, action move. You could expect a reaction into our lines, and we kind of get it. I mean, that's exactly what this is. So you don't want to take a reaction move because the odds are not good. The only time that reaction move is going to work would be a V-shaped reversal because the reaction is actually an action in the opposite direction, and you need that kind of market condition with a wide range and just trading up and down the upper and lower boundaries type of thing. And this is just that's not what this is. We know that after the fact, but that's just a weak trade. It lost. So finally another action move up. Other setups caught that move. And now what's looking like another reaction that I don't want to trade into, but when it came back up and made a new high and broke resistance and failed, and then came down a second time to test that and get through the support that was one tick beyond the entry as established by the bar that first touched the entry, all of a sudden that setup is a different setup to me. All of a sudden that's a setup that just has a better chance of winning. And so I placed the trade. I still got roadblocks to get through, and it still might lose. But I think the odds are better, and that's what trading is all about. Yeah, and what you said about money management, Francois, there's money management for me, and I'm going to lock in my one tick. So I have a risk-free trade, and I consider this a successful trade right now, and I did put it one tick lower because I went one tick beyond my money management level. Can it get down to my target 2? Looks like it has a good shot. But do you see how I thought through the process? I gave you the benefit of the contents of my brain by talking you through what I think through when I'm looking at a setup. Now the trade plans are what they are, but remember those are starting points. I got to teach you something. But when you get to the higher level and you've been looking at price action and going through the steps and working on your charts and working on your trade plans, there's target 2. So that's a full winner. But what I'm saying is that you ultimately have to make it your own. And that's why the kind of question that Francois just asked is such a great question, because he's making it his own. He's thinking through. He even has stats on the pink trade. How many of you have stats on the pink trade for the market you're interested in trading? I've given you the tools to establish those stats. I've shown you how to use those tools, but how many of you are using them? So the answer to Francois's question is kind of what I've been going through with this, the last 15 minutes is having you look at what the price action is saying. Look at the places where the price is rejected or not.
Order
Look
filled.
at the breakouts that don't go anywhere, and there's a target 3 winner, and I'm done. I don't need to trail. If I had a third position, maybe I'd trail. I went with 2 positions, target 2, target 3. I didn't take the first trade. That lost 22 ticks. The second trade, to me, as I talked you through what I went through in my brain, looked like it had high odds. Even though the lines crossing up with the yellow, that's a test zone, and it failed the test. It failed to make new highs. It made a new high and failed to follow through. The fake breakout through support and resistance that fails will often set up a strong move in the opposite direction. What just happened? And I just put my money where my mouth is because I saw that and I'm like, you know what? That's the kind of trade I look for. So why shouldn't I just take it? My trade plan allows me to take discretionary trades. At this stage in my career, I feel like I'm capable of doing that. You guys might be also, some of you, and those that aren't, that's okay. But you have a structured trade plan that works already. Start with that. There's no way you're going to be able to have the thousands of hours of market and chart time that I have because you haven't called a live trade room for 14 years. And by the way, this month is my 14-year anniversary. So how do you substitute experience? There is no substitute for experience. It's just, listen to what I'm telling you and start observing the stuff I'm saying and look for it yourself and then practice it and try it. Maybe you evolve your trade plan. And I would suspect a lot of you in here don't even have a trade plan, although I'm hoping that's not the case. I'm hoping most of you do because you've been in with me long enough to know how important that is. But in the end, price action gives you the information you need, and the markets will give you what you ask for. Careful of what you ask for. Maybe you're not asking, or you're asking the wrong question. Francois says, must say it is true, the more you look at the price action, the clearer it gets. Yeah, and the pink trade, if you could take the pink trade I just showed you Under those kind of circumstances, which trust me, you're not going to find that in code. That comes from the brain, being a human being. But if you can just take those pink trades, what do you think your profit factor would be then? And that's the big picture answer to your question. John C., I missed the early bit of this due to an internet outage. Will it be posted later? John, luckily I am recording this and I will post this later. Francois D., John, is the SMA proximity trade part of the fun with moving averages? Yes, it's also Spotlight Master Suite. You already have it in the Master Suite if you've got the Master Suite. Fun with moving averages is just my way of having fun with moving averages, you know? And it's using the Spotlight concepts with other lines other than the 50 and the 200. And I'm probably going to end up with some sort of a new training. And actually I am. I just got to work on it a little more. I've just been so busy with other things. But fun with moving averages is going to be coming up. I'm going to train you on it to make you really good at it. Yeah, hit T4 and beyond. But remember the magic formula. Look, you guys, let me tell you, if you want to just succeed at trading, and if you're at that place where you feel like you understand the strategy and you realize why the setups are what they are, you could start to think about what those setups are good at and what they're not good at. Nothing's good at everything 100% of the time. It's the combination of the setups that give you the ability to quit with a positive result most of the time while minimizing your drawdown, while controlling your drawdown with minimal and efficient trading. That's the goal of the Spotlight, isn't it? That's the basics. You start with that. That principle alone is going to take you places. But once you start paying attention on the higher level, which is why, you know, this trade room, it's the whole point, then you could start to learn how to specialize. You can learn to specialize in a particular setup that speaks to you, that you're comfortable with, that you understand it. And even if you take the trade and it loses, you pat yourself on the back for taking the correct trade. Nothing wins 100%. We don't need it to win 100%. We just want to quit with a positive result a vast majority of the time while controlling our drawdown with minimal and efficient trading. Can you say that like 10 times in a row? That's the goal. That's what you want. That's making money as a trader. A real easy trade to look for is when you see support or resistance being broken and then no follow through. The setup in the opposite direction will have good odds and it could be a strong move. Isn't that what I always say? Fake breakout leads to a strong move in the opposite direction. When we were talking about this, it was here. We watched it the entire time. We saw it break out and I was saying, you know, that short trade doesn't look very good. I wouldn't be surprised if it loses. It's been nothing but up since we started. Blah, blah, blah. What do I know? Not much. And I changed my mind really fast. That's another thing about being a trader is you have to let the price action dictate everything. It popped through by one tick and failed to follow through. Notice how well placed the stop was. And notice that was the 6th reversal in a row. That trade worked. Even if you got in at the original entry, you'd be a winner. You would have had to sweat it out a little. But I still like the odds better after it broke out and failed to follow through and then came back down and gave us a second chance to take the entry. That's what I waited for, right? Because I know this setup and I'm comfortable with it and I like it. And you guys can learn how to master this exact same type of setup. And you'll be so thrilled at the results you get. You have to filter out the rest. Become a specialist. Specialize. Practice it. You can practice this all the time and track your results. You have the UTA spreadsheet. You can configure it to track your own trades and see how good you get going forward with this idea. You can master that technique. Why not? Did anyone see the video that I did the other day about, it's on the blog post, the Backpack Trader? You guys been visiting my new blog? I need to see some interaction, you guys. Sometimes I feel like I'm talking to an empty house. I've got a blog called the Backpack Trader. Does anyone know why I named it the Backpack Trader? Has anyone not been there yet? I showed you a setup, one that I really like, and it's so simple. It's such an easy thing to see. You see it happen, It's so easy. It's when you get a bar that looks kind of like this or this. Basically, you got a wick and then the body down in the opposite direction going up. And you want to see the wick stabbing up into your lines. I don't really see that happening in this particular setup or sequence. We can find one where it does. But you could use like a trend jumper style trade and trade off that one bar for very low risk and very high potential. And if you line it up with spotlight ideas or counterpunch ideas even, either one, exhaustion dots, balance line, closing below the line on shorts, and you got that bar stabbing up into your lines, you can set up a really nice trade where you're only risking a few ticks more than the length of that bar itself with the chance of big gains. You guys, visit my blog. How about our Facebook page? Facebook/Backpack Trader. You know why I chose Backpack Trader? Everyone in here is a backpack trader at heart because it symbolizes freedom. The whole idea is that you just need a laptop and an internet connection and the ability to log into the markets and take some nice setups, and you can be free of everything. That's what the Backpack Trader is. Free. Whether you trade from the Siberian Express or your own sofa or anywhere in between, it doesn't matter. You're a backpack trader when you achieve freedom. And that's what the whole message is, and that's why we're here, isn't it? I mean, isn't that like the step one of the success guide is why we're trading in the first place? If you focus just on the simple stuff to accomplish your goals, you'd be amazed at how successful you could be. Most people lose because they overcomplicate things and make things harder than they need to be. And why? Why do they do that? It starts by asking the right question of why you're trading in the first place. I mean, I hope you guys realize that's why we're here. Yeah, John, hopefully you give us some nice photos. There's a section on the Backpack Trader where you guys can kind of submit your photos or remarks as to where you trade from. How are you becoming your own best version of the Backpack Trader and what that symbolizes? Because if you start thinking on that level, you'll start doing things that help you achieve that goal. And again, that's why we're here, guys, right? I always say we're trading to make money, but there's a bigger idea because money is just a means to an end. We're trading for freedom. At least to me, I don't know what could be a bigger picture reason for trading than that. The no more scheduled goal. Wake up when you're done sleeping. My alarm went off today. I hate it when my alarm goes off. I'd rather keep sleeping. I did this interview a couple weeks ago with Rob Booker. You guys know Rob Booker? Great guy. Love Rob Booker. And I was at this social event with him, and he was doing a live YouTube, just spontaneous video. We were all sitting around the room, and he's asking us to all just kind of talk about our routines in the morning when we get up. What do we do? And I started thinking it through, and I'm like, well, first of all, I'll check the calendar. Is it really Monday? Dios mío. I got to get up at 5:30 in the morning. Kind of goes against the Backpack Trader theme, but then I live on the West Coast, so it's a trade-off. But then I check and see that it's not a 3-day weekend. So everyone's laughing. Then I got to navigate my treacherous commute to my office down the hallway in the dark, try not to trip on my son's skateboard and fly down the stairs and break my back. Because I don't want to turn the lights on. I'm still kind of in sleepy mode. I have to wake up slow. I'm a terrible waker-upper. Grumpy, want to stay out of my way in the mornings. Not because I don't love you. I'm just a terrible waker-upper. But it's a routine, right? And for me, routines are very important because with a routine, I do it the same way every time, every day, and it sets the tone for my trading. When I approach my trading the same way each and every time, part of my discipline. And I would have told you this 10 years ago. I'm telling it to you now. Time to unleash the parrot from the cage. That's funny, Lola. So, I mean, I don't know what else to do, you guys. We're 10 minutes away from reviewing Counterpunch Trader, so we're going to do that. It's amazing how the NQ has literally not had a trade except for the one that didn't work. Why did Spotlight miss the move down? Well, quite simply because there just wasn't a setup. It's so flat, there's no overbought, so there's no short, and there's no exhaustion proximity to the 50 moving average. Now, what if I were to show you the bar that I said is a really nice setup? And I see it happening a few times here, and this would be a nice trade. When the price comes down and breaks below the 200 moving average, it's closing below it. It's still testing, testing, testing. And notice the stab up with this shaped bar right here into our lines, like so. If you just focus on looking for those bars, you could do so much with that. Any one of those three bars is fine. I like it after the consolidation, but the first one's fine. I mean, you even see it here. But to me, I'm not sure that the move down is finished until it starts jiggling a bit, right? It closes below the line, and now it's coming back up. It's testing the line. When you're on this bar here, it hasn't done that yet. It's breaking through, and it might keep going or might not, but I want to see a little bit more information. But then you get the stabbing up again into our squeeze zone space. Follow the yellow brick road. Look at the 20's bent down, the 50's bent down, the 200 is bending. You could easily grab your fib line retracement tool and do trend jumper style, like so. One bar. You can put your stop one tick above. You can put your entry either two ticks below, or maybe you make it break through a little further down. It's up to you. You could do it on the next bar. You could do it on this bar. The third one's actually probably the best, because that's the third time it's stabbing up through, and the sellers are winning that battle because all those bars are closing lower. Remember, light gray is down, closing down. And you could just go trend jumper style and use the length of the bar as your 1x. And are you going to catch a move or what? I mean, you're only risking 2 ticks below the bar and 1 tick above, right? So that bar is 16 ticks. You're risking 19 ticks. So, you know, maybe you want to go to a target 3, target 4, or even below. You could even make more targets. All you have to do is type them in, right? You just configure your fib line retracement tool, take off the fibs, which are retracements, put in negative numbers in multiples of 50, because that's the X factor of the length of your bar that we're using as our X factor. We don't need the minus 90. That's just money management. But you can put in minus 300, minus 350, minus 400. Minus 400 is going to be close to a 4-to-1 risk-reward ratio. Or you could just trail the balance line. That one little bar, I want you to start looking for it. This is it here. That one didn't work, right? That's not going up into our lines. It's just not the same setup. This one is going down into our lines. That's interesting for the on the long side. So is this one. Some of them don't work, but the market's already coming. You know, did that one work? I don't know. They don't all work. It actually got up to 76567 as target 1, and it got up to target 1. Got up to target 1. Remember, using the length of the bar. It's a trend jumper style because it's a single bar, but you can team it up with exhaustion dots, balance line, price action, and the EMAs tell the story, all fanning apart from one another, along with the balance line and the price action. And I brought this up in the Backpack Trader blog and showed you an example of a trade I took the other day, right before I did the Wealth 365 webinar. Same setup, same everything. Worked like a charm.